Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, welcome to another edition of our top stock pick of the week. It's me and Dave Bartosiak, editor of the Surprise Trader and the Blockchain Innovators Portfolio. Joining me later will be Andrew Rocco. He's got one for you, but let's go ahead and kick things off with my first idea here. It is Frontdoor, ticker FTDR. It is a Zacks rank number one strong buy. Let's take a look here on Zacks.com, see why I like it. Now you have the value style score of B, growth of A, momentum of B, to help it round out with a VGM composite score of A. Technically, it's in the building products miscellaneous industry, which ranks in the top 15% of our Zacks industry rank. It's a little different from your average building products company. This is like the home warranty company, right? So if you buy a new house, they make sure that, if something blows up, they're going to go ahead and shoulder some of those costs for you. A couple things I want to point out here on this detailed estimate page. First and foremost, PE. Less than 14 PE. Compare that to an industry average of 20, or the S&P 500 is nearly 22. So that jumps out of the page here. If you're looking at revenue and EPS growth, they're not spectacular numbers. Obviously, not something we're going to see like in some of the tech industries and such. But you still have revenue growth for this year, 2.86%. They're hoping that bumps up to 5.28% next year. Take a look on the EPS side of things, 9.5% growth for the current year, 8.43 for next year. But look at these recent estimate revisions. So following their last earnings report, you have 4 analysts coming out up in the ante for the current year, 4 for next year. So current year numbers go off from 235 up to 252, while next year's gone up from 262 to 273. Now that's all well and good, but the real cool part is right here on our price consensus and EPS surprise chart on Zacks.com, my favorite chart. Why? Because you can really see how the magic works here. So what I mean by magic. So these multicolored lines represent the evolution of our Zacks consensus estimates over time. And the black line here is the price. See these green arrows? These are all earnings beats, and most recently some big earnings beats. So what we have is estimates came down in 2022, bottomed out into 2023, and have ticked out higher. Price followed along those estimates. Funny how that works, right? Coming on down and creeping back up. But here is where the opportunity lies, because there is divergence between earnings estimates and the stock's price. In this case, earnings estimates have continued to climb higher, while the stock's price is kind of moving sideways. I view this and this opportunity for these estimates, or for either estimates to continue and the stock to catch up. That's really where I see huge opportunity. So I love it when I see this sort of divergence on a chart, because what you're telling me now is as estimates have gone higher, valuations have gone lower. Doesn't make a lot of sense in the grand scheme of things, especially when you still have that growth baked in year over year. So that is why I am naming Frontdoor my top stock pick of the week. Mr. Rocco, what do you have for us, my friend?
Okay, thank you very much, David. My name's Andrew Rocco. I'm a stock strategist here at Zacks Investment Research. I'm also the manager of the Tech Innovators Portfolio Service, and I'm going to provide my top stock for the week of June 17th. So let's jump into things here. So my top stock pick is going to be Zacks rank number one. It's a strong buy stock, PDD Holdings. And if you don't recognize that, you might recognize them by their previous name, which was Pinduoduo. It's a Chinese e-commerce platform founded in 2015. And though PDD is much younger than its rivals like Alibaba or VIP Shop Holdings in China, it has gained a significant popularity in a relatively short period, becoming one of the largest e-commerce companies in China. And they also are now in the US, which is one of the bullish tailwinds that I'm going to discuss in today's presentation. So last quarter, PDD's quarterly earnings grew 50%, while its revenue soared 44%. That's year over year figures. So impressive growth. And for the past several quarters in a row, PDD has grown the top and bottom line numbers at a robust double-digit clip, far outpacing both its domestic and foreign industry group peers. You can see that in 2021, the company flipped into profitability and hasn't looked back since. And for example, in Q1 2020, the company lost 50 cents a share, EPS wise. Now it's gaining 263. So quite the turnaround, and that growth has been steady and consistent. And now they're solidly in the green. And as far as growth goes, they're outpacing, as I said, their e-commerce peers in both China and US. And as China starts to turn around, I think PDD is going to be to benefit even more from any potential economic turnaround in China. But let's get into the specifics. So Temu, which is TEMU, that's PDD's e-commerce website, and it's really put the company on the map. Temu is an online marketplace and e-commerce platform that has garnered popularity for its extensive offering of affordable products. The e-commerce platform launched in September 2022. It's available both in China and the US, but the US is really the growth engine for them. And the way that they got popular is they made the bold decision of spending a lot of money on a Super Bowl ad. And that Super Bowl ad in 2023 really put them on the map as far as U.S. customers, e-commerce customers go. So Temu is PDD's discount e-commerce platform, which leverages Chinese vendors to sell and ship directly to customers in the destination country. Because Temu cuts out the intermediary and takes advantage of low-cost labor and product inputs from China, the website can undercut other e-commerce websites like Alibaba's AliExpress or Amazon. And to understand the Temu story, I think you really want to understand the current competitive landscape and kind of look at Temu versus Amazon, which is kind of the undisputed leader currently in the US. So traditionally, Amazon has enjoyed a stranglehold on the US e-commerce market and has dominated that market. However, Temu has taken a unique approach and is catering to a growing niche. Rather than assuming customers would rather have their product shipped to them immediately and for a slightly higher cost, Temu is going the other direction. They're catering to a small but rapidly growing segment of the market that is willing to wait a couple extra days, but also benefit from those lower prices. So if you watch any Jeff Bezos interviews, he always talks about getting the shipping, always doing what the customer wants and getting the items shipped. You could get them same day shipped. This is a slightly different demographic from Amazon because you're not going to beat Amazon at their own game. But Temu is, again, catering to this one area of the market that might be a little bit more affected by the inflation that's going on in the US. And again, willing to plan a little bit ahead and wait for those more inexpensive products. And instead of sourcing products from several different intermediaries, Temu operates a marketplace model that connects the buyers directly with sellers and ships cheap goods directly from China, as I mentioned earlier. So that's kind of parsing the difference between Amazon and Temu. I don't think Temu is going to take down Amazon, but I do think there is room in the market for both. And even if Temu just gets a couple percent of the US e-commerce market, it's going to lead to the continuous growth that we're seeing as far as the earnings go. Now, let's talk about another potential industry catalyst, which is a positive for Temu and other e-commerce, US-based e-commerce websites, and is a negative for brick and mortar. So retail theft plagues brick and mortar. Since 2018, the amount of lost retail revenue due to theft has grown each year consecutively and has soared overall. So for example, in 2018, retailers lost $50 billion to theft. In 2024, that's projected to balloon to $130 billion. So from $50 billion to $130 billion in just a couple of years. And that's expected to continue to grow to $143 billion by 2025. Retailers lost $112 billion in gross revenue and $84 billion in fraudulent sales returns in 2022. Meanwhile, the average shoplifting incident cost retailers $461 in 2020. What's leading to this? Brazen organized retail incidents are becoming commonplace. Regardless of where you stand politically, it's a fact that these people are not getting arrested. And even this in-store security is not doing much about these shoplifters. They're caught roughly 2% of the time and arrested 1% of the time. So 1 in 100 shoplifters is going to get arrested. So what that means, how does this relate to Temu? Well, CVS, Walgreens, all those kind of companies are closing down or they're suffering as a result. You can see in the picture, they have to lock up even something as simple as a nail clipper or body wash. I experienced this when I was in New York City. It's all locked up behind these glass doors. So it really, it makes the shopping experience not as pleasant, to say the least. You have to flag down an employee. They have to take you, unlock it just to get a body wash. Then if you want to get deodorant, they have to unlock this glass thing again. So as a result, I think a lot of people are going to continue to move on to e-commerce rather than have to flag down an employee, walk around, and just go through this tedious kind of annoying process. So that's just a larger tailwind that I believe will benefit the company. Now, let's get back to the fundamentals. Top and bottom line growth continues to soar for PDD. For the current quarter, sales are expected to grow 91%, and EPS is projected to grow almost 100%. And you can see EPS is going to grow 90%, 85%, and then 21% expected for full year 2025. So really can't ask for better revenue and growth numbers if the company is able to meet these expectations. And I'm going to show you why I think that is possible. I like to look at the company's history of either surprising positively or negatively as far as earnings. And PDD has a bullish EPS surprise history. Over the past 4 quarters, PDD has beat EPS expectations by an average of 45.6%. So really strong history. Even though expectations have moved up as the companies earn more money, they've been able to outpace those expectations time and time again. So Wall Street is still playing catch up on this story. And I think it's an underrated story. That's why I'm bringing it to you today. As always, we want to look at the technical chart to make sure that the fundamentals link up with those technicals. Right now, we see it's forming a perfect weekly cup with handle or just a weekly bull flag, depending on how you interpret it. Either way, this looks like a bullish chart pattern to my eye. And then finally, it's showing relative strength versus its peers. For example, PDD is up 86% over the past year, while Alibaba is down 15%. So I never want to argue with the market. I'll have a strong fundamental conviction, but I always defer to the price action because that's actual buy and selling. So in this case, the fundamentals are strong, and then the technicals and relative strength are backing up our thesis here. And for those reasons, we are bullish. PDD Holdings, ticker symbol PDD, Zacks rank #1, strong buy. So again, just to summarize, PDD's unique Temu platform is helping e-commerce shoppers fight inflation while growing the company's earnings rapidly. And we like the stock over the next 6 to 12 months. So thank you all so much for tuning in. If you want to take advantage of our promo, go to zacks.com/promo. Again, hope everyone had a fantastic Father's Day, and thanks for watching.